Hello and welcome to the latest edition of the Tax Hour. I'm really pleased to be joined for a second time by Michael Sherry. Thank you for joining me and coming all the way back down again. We didn't actually plan too much about this. I don't like planning podcasts too much because the whole point is it's conversational anyway. So we actually said we've got a lot to talk about on ERS, so let's just put something in the diary and we'll have another chat. Now we've actually said, let's not do some ERS this time. Let's have a little talk about HMRC Spotlights, avoidance. And before we were just having some lunch before, we were talking about generally the UK tax regime as well, weren't we, in terms of...
We were. And I mentioned that the Addington Society, which is a talking shop for tax-obsessed individuals like myself and you, I saw Pete Miller there last week, and we were talking about the GAAR. We had some of the people who were involved in setting up the GAAR and setting up the GAAR panel and how it operated, and that was really interesting. But one of the reflections that occurred to me was the way we've got the GAAR and the way the revenue guidelines say it's changed the whole approach to statutory interpretation, which I don't think is right, but never mind. Their problem is that if legislation is construed strictly, then loopholes present themselves, possibly, and ideally they want something to stop there being any loopholes. But the reflection that occurred to me was that the problem of legal boundaries isn't confined to tax law. It occurs in all legal circumstances. And law, the task of the courts, the task of advisors, is one of classification. It's not, conceptually, it's not a difficult activity. It's saying, do you fall within this description or do you not?
Yeah.
So possibly ascertaining what has to be described, working out what the facts are, might be quite difficult, and most of our civil courts spend a lot of time on that,
on the facts,
investigating what did or didn't happen.
Yeah.
But the tax courts spend a lot of time, and certainly the appeal courts spend a lot of time on, well, okay, so that's what happened, or that's what the first-tier tribunal has said happened. Now, how does it fit into the law? How do we classify it? And that is so difficult because of the length of our tax code. Every boundary you have has the possibility of falling on one side or the other.
Yeah.
So the more complex your code, the longer it gets, the more opportunity for tax avoidance you generate. And having a general anti-abuse rule is not going to restrict that, because genuine choices, commercial choices are going to have to be made.
Yeah.
And a GAAR might deal with the peripheral, some of the peripheral stuff in the make-believe world of scheme promoters.
Yeah. So just to go back to very basics, the GAAR, you just mentioned it, was the General Anti-Abuse Rule. The way our tax code is set up, we have a whole set of rules, as you say, crazy long now. I deal with a really tiny proportion of that in the advisory work I do. And so the longer and longer it gets, the more difficult it is, certainly for taxpayers to understand, I think. As an advisor, you have specialists in different areas. So actually, if you're doing something, especially if it's a higher risk or higher value, you end up with multiple different advisors in their own niches. And it's about amalgamating a whole load of different tax law for a single commercial transaction to actually understand what the implications are. 9 times out of 10, that's actually the easy bit. And if it's a commercial transaction, shouldn't be even questioned. Well, it might be questioned by HMRC, but it shouldn't go any further than that. So then we have this general anti-abuse rule and a whole host of anti-avoidance rules throughout the whole legislation, which basically takes a set of rules which you might be able to apply and understand and brings in this huge grey area, because now all of a sudden, if HMRC have a problem with it, actually now we can just fall back on the GAAR. So to me, the GAAR in itself, whilst it might be necessary because you can't think of every single transaction that might happen, especially when, industries change, especially in the world of information technology, and, there's cryptocurrency was not heard of 10 years ago or whatever. And so you can't write a set of legislation for every single eventuality. So I understand why you need something, but they're so widely drawn. I think it makes it very difficult if there's any element of doubt for a client or a business or a taxpayer to feel like they can absolutely rely on the tax code that they have, and that HMRC might not question it.
Yeah, and there is it seems to me, the revenue should be prepared to accept that there will be loopholes, perhaps the wrong word, but that there will be cases which fall the other side of a definition which collects tax, and that is the natural order of things. Yeah. And if it gets too expensive, then okay, move your line, but don't say let's junk the whole of our approach to statutory construction and have a different approach which requires taxpayers to divine what Parliament really meant, even though it used words which didn't say that.
I mean, some of the tax code we have, stamp duty is the easy one to go for because it's been around for centuries. But so some of the tax code we still rely on is over 100 years old. Yeah. So the Parliament, how it was drafted at that point, and sometimes words change meaning over time even. So
175 years old. So
there you go.
the Income Tax Act 1842 was the act which brought in the scheduler system, and so Schedule D, Schedule E, so on. And that scheme is still preserved in the post-tax law rewrite, in the distinction between trading income and employment income and property income. Yep.
Just don't call them schedules.
We don't use schedules, but we have separate codes for the computation and quantification of those streams of income, and the essentials are still there. So for trading income, it's the accounting results minus anything which doesn't satisfy the first anti-avoidance rule, wholly and exclusively, and then a list of other things which have been tacked on over the years.
And that's the other problem, isn't it? Everything is just tacked on. We have a tax system that was written centuries ago, and it has just been tacked on. I know, we've got newer acts, so we've got CTA 09, 010, CTA 2010, ITPA 2003. So all of them are, or a lot of them are actually this century. But a lot of them are just rewrites of the previous legislation, adding new things in. So,
and things like some of our rules, which are enforced strictly, were originally meant to be in the revenue's back pocket as an anti-avoidance rule for egregious cases. So, for example, the test for deduction of expenses for trading income is wholly and exclusively, and for employment income is wholly exclusively and necessarily. And that is quite different from the US test, for example, which is much more generous, which is, I think, something like, and don't quote me on this because I do not practice in US tax, but it's something like reasonable or necessary.
Okay, that's
much more generous.
Much more generous, yeah.
So sometimes these detailed rules, which we think, well, you've got to have that, otherwise the whole thing would fall apart. No, you can have much more business friendly rules.
Yeah.
What are we going to do about the US suspension of their corrupt practices, prohibition on tax deductions? Well, their prohibition on corrupt practices having been suspended. You're aware of what I'm talking about?
Explain it a bit more,
okay.
please.
So President Trump has declared that in jurisdictions where the competitors to US companies operate and it's not unlawful to carry on what are called corrupt practices, essentially bribery.
Yeah.
For the last 30 or 40 years, however long it is, the US companies have been prohibited by US legislation from following corrupt practices.
Yeah.
And they effectively led the world in cleaning up procurement in the developing world. They spearheaded the approach of the UN on this, and they implemented it domestically. Now, the rest of the world has always said, well, the Americans have said that, but they're still cheating. Whereas we have now the same rules. So it's illegal to commit crimes abroad if it would be illegal here, and you run into the money laundering rules if you're not careful. But we've got the anti-bribery legislation. Yeah. So are we going to suspend that in jurisdictions where the US is suspending it so that we can compete with our bribery? Or are we just going to fold our tent and retreat in the face of US outright corruption? Well, of course, the tax code prohibits us from taking a tax deduction from that kind of stuff.
Yeah.
So do we have to form a US subsidiary to do that kind of bribery in those jurisdictions? And then what happens?
Yeah. It's a minefield.
Yes.
We've got the GAAR. How many cases have we seen of the GAAR? Because we've talked about the fact that we've got a strict tax code. HMRC has avoidance legislation to fall back on. The GAAR, to my mind, and correct me if I'm wrong, but is kind of the furthest they can fall back in a sense, because the anti-avoidance rules, like employment-related securities is an anti-avoidance rule, wholly and exclusively test anti-avoidance rule. The GAAR is always something I've seen as, well, if you can get through things like the employment-related securities rule for the sake of argument, and it's not considered to fall within those rules, then how far can HMRC go in terms of the GAAR? It has to be pretty aggressive tax planning to actually, well, it's in the name, isn't it? Abuse.
It's got to be abuse, which means it's got to be either contrived or abnormal.
Yeah.
Or and actually, there is a school of thought which says the phrase contrived or abnormal is a composite phrase, and so contrived is flavoured by the use of the word abnormal, and abnormal is flavoured by the use of the word contrived. So it's almost got to be a bit of both. Maybe.
I get that logic.
Even though you would think the use of or would be disjunctive rather than conjunctive, but in the overall scheme of the GAAR, maybe it's not. So there haven't been that many cases where it's been argued. I'm not aware of any cases, and of course I'm going to be wrong, aren't I, when I say this? I'm not aware of any cases where the GAAR argument has been successful and it didn't fail anyway.
Okay.
But it seems to me that the driver behind the movement which promoted the GAAR Graham Aronson's working party set up by the Tax Law Review Committee and various other good and great figures in the tax world, was concerned about the length of the tax code, concerned about its complexity, concerned about the uncertainty around anti-avoidance rules.
Yeah.
And we were talking earlier about some of those rules. So Section 75A of Finance Act 2003, which is the stamp duty land tax avoidance rule, which applies to schemes or arrangements.
We can get into that if you want.
And we can come back to that maybe if we have any time.
Yeah.
But that doesn't have a motive test.
Yeah.
Whereas most avoidance rules
do
have not necessarily a motive test, but a purpose test. And what's the difference between the two and so on. So it was that kind of thing that Graham and his committee were aiming the GAAR at. The idea would be we wouldn't need anti-avoidance rules, targeted or general, if we had the GAAR. So that if you were doing something abusive, well, if it was that bad, here you go. And if it's not that bad, well, just amend the legislation to get it right. You don't need anti-avoidance rules.
I guess the problem, I do get that point. The problem is when you don't, if you had a case without these anti-avoidance rules and then we said, well, we didn't like that, we'll amend the legislation. In a sense, the anti-avoidance rules, as you say, either whether it's targeted or general, almost allow HMRC to have some sort of retrospective application. Whereas if you had a tax legislation that just said, this is the rules, taxpayers fallen within these rules, HMRC go away and change the rules, and then from here on forwards, because they've almost never retrospectively introduced legislation. Whereas if you've got general anti-avoidance or rules, it basically says, well, you didn't fall within those rules, but we can rely on these anti-avoidance rules. So retrospective may be the wrong word.
But the whole point of the GAAR was, well, this is where you go if the ordinary rules haven't worked. And this should cover everything. So to put it another way, if your transaction is not contrived or abnormal, if it's not abusive, as defined by the legislation, what's wrong with it? Why shouldn't it do what the legislation says on the tin?
I think where I'm coming from, and this is more about the lack of cases I've seen of the GAAR, is that because I've only seen it used in the more extreme cases, I'm thinking, we still need those avoidance rules because they're almost for the less extreme cases. Maybe I'm completely thinking this wrong way around.
Well, I disagree completely. My view is that the avoidance, either you have the avoidance rules or you have the GAAR, but having both is just a condemnation of just how appalling our tax system is. If you feel you need both, you shouldn't.
Oh, no, I do agree with that point, to be fair.
And one of the things which I think has changed over my professional career, and I think it's partly, this is an aspect of it. So 40 years ago, when dealing with inquiries from people thinking about inward investment into the UK, one of the selling points was that our tax system was reasonably clearly understood, that the revenue were acted sensibly, that dealing with them was businesslike, that they knew what they were doing, and everything was predictable. And if you couldn't get something, if you had a point of difficulty and there wasn't a formal clearance procedure, you could talk to people and you would get sense and you'd be okay. And if the numbers were big enough, you could get something in writing from someone.
I'm not sure you're describing a HMRC I recognise.
It doesn't exist today. And yet at the same time, the rules have got a lot more aggressive. And that brings us back to the spotlights. So one of the things we talked about earlier, you could be forgiven looking at the 70-odd spotlights that we've got that have come in over the last 20 years. So that's 3.5 spotlights a year.
Yeah.
But they're not withdrawn. So, what exactly is the revenue spotlighting? Wouldn't it be better to number them by year and to withdraw them if you think you've dealt with the problem, or to resurrect them if there's still things that people should be looking out for?
Yeah.
But what they tend to suggest is that if you go about some of these things the wrong way, you come a cropper, which sometimes suggests that if you go about it the right way, you don't come a cropper.
Yeah.
And that then leads to a thought process, which is tax avoidance is possible. And that then means that when the revenues say, oh, if you've done that, it was too good to be true, you should have realized that it wouldn't work. Well, in a simple tax system, I could agree with that. But given the complexities of our system, where a non-tax practitioner cannot hope to understand even, the tax rules to do with employment, which is the most common form of income generation in the country.
And how long is ITPA, for instance? It's hundreds of pages long.
The length of the code, but also you get a pay slip once a month. Most people look at it, they look at the number which tells them what's gone into their bank.
Net pay. Yeah.
And they look at the number which tells them how much tax has been taken away and how much national insurance. And they resent those numbers, partly because they haven't a clue how they've been arrived at. And I remember 20 or 30 years ago, as automation was coming into the tax profession for the first time, sort of the 80s and 90s, there was one of my mentors, Adam Brooke, who was senior tax partner at Arthur Young in those days, and was with Ernst & Young for a while before he set up on his took his non-nom clients into a boutique.
Right.
What Adam did was to say publicly, I think he was maybe president of the CIOT at the time or something like that, say publicly, there's no harm in having a complicated tax code if you've got computers to sort out how it applies. And I've always thought that's wrong. I think you should have a tax code which, for simple transactions like earning a wage and having travelling expenses and having accommodation, it should be simple, sufficiently simple for everybody to understand. And I personally think that the old system where you had a flat rate of tax, standard rate of tax, and then if you had a big enough income, there was a wholly separate computation of surtax.
Okay.
But it meant the application of the rules to the basic income was straightforward.
And so most people in the country actually just fell within that.
Exactly. Right. Well, everybody who was employed was governed by the employment rules, standard rated tax. If your income was big enough, you also had to have surtax, but it was a much simpler system.
And
then there's another problem with all this, just to step outside tax technical for a second, but not perhaps to spend too long here, but where the benefit system overlaps with earned income, we've got shelf stackers and checkout staff at Tesco's who are receiving benefits.
Yeah.
At one level, that makes sense. So, if you're moving from unemployment into employment. You don't have a cliff edge.
Yeah.
And you support the people to the extent they need support. But what it actually means is that the tax system is getting pushed and pulled a bit because this is happening. And the state is helping to pay for Tesco's business or Sainsbury's or Waitrose or whoever it is. I mean, that's a political issue. But
I was going to say this, we talk about sort of...
And I think as tax practitioners, we need to have views about that. Even.
And when I was doing quite a bit around the last budget, a lot of it actually comes down to politics, even more than the actual, tax take in a sense. I mean, the obvious example when, it's a first Labour budget for, was it 10, 14 years or something? And they'd already ruled out, we're not going to touch workers, so we're not going to touch income tax, we're not going to touch corporation tax. So they'd ruled out probably their biggest tax takes. Mm-hmm. And so because of that, and because of the political nightmare it would have been to backtrack on that statement, they then end up trying to do lots of other things to get little bits of tax from different areas. Whereas I always thought, well, if you increase income tax by 1%, you'll get as much tax out of the system as you would have done with, the IHT changes and all of that. So as nice as it would be just to say, okay, well, let's just have a simple, fair tax system. It's difficult when you have political parties, having made promises, and as you say, you've then got the benefits code. That there's lots of different things, and it comes down to economics just as much as it does tax and politics and all the rest of it. So it's difficult to actually say in this day and age as well, when you have a much more complex world of commerce, with international trade and all the rest of it, how do you keep a simple tax system in the world we live in today?
Sure. Nobody ever said it was easy.
That's true.
The problem is they're not even trying.
Yeah.
That's the problem.
Okay, I take that point. Yeah.
It's not a priority. Shall we talk about some of these spotlights?
Yeah, we've been a bit talked about the fundamentals a bit there. So so let's talk about some of the spotlights. So we've talked about the GAAR, and the spotlights are basically something HMRC puts out, as you say, 3 or 4 times a year, it seems, just to highlight some things that they're aware of that they deem to be an acceptable abuse of the tax system one way or another. So
the most recent one, VAT grouping structures arrangements used by care for providers. Now, shall I?
Yes, please.
Explain?
That is not my thing.
Okay. So if you're wholly exempt, you can't claim any input tax.
Yep.
If you're wholly taxable, you can claim all your input tax. Yep. If you're a bit of both, then you go into what's called partial exemption, and you can claim some of it back. Care providers, if they don't mind, so broadly speaking, care services which are provided by charities, exempt bodies, so not-for-profits and so on, are exempt. But if they're provided by somebody else who doesn't fall within that exempt definition of provider, then they're taxable. Okay. So care services get provided to 2 main groups of people. Mm-hmm. Local authorities, if you have a taxable supply to a local authority, the local authority can claim the money back from the Treasury.
Okay.
If it's fulfilling a statutory duty in what it's doing. So if it's providing care.
Providing care to the public.
Which is something which the central government tells it must do.
Yeah.
Or if you're providing care to individuals, say in their home or whatever, you want it to be exempt because they can't claim the tax back.
Yes. Okay.
Okay. So most care providers, it wouldn't much matter if they employed their staff directly, but that isn't how the system works. Most of the staff are provided through agencies.
Yep.
And that's to do with the fact there aren't enough care workers. It's also to do with making the cost of care more expensive than anybody would want it to be, so that the people providing the agencies can. Did I say that?
We'll cut it. We can.
The commercial, whatever the commercial reasons.
Yeah.
The majority of care workers are provided through agencies, and that therefore means, because of the way the VAT system operates, that VAT is charged on that supply of what's called a supply of labour.
Yeah.
So you've got a care provider, the charity supplies directly to the people who are at home care and doesn't charge VAT. It forms a subsidiary which supplies the local authority. Because the subsidiary is not an exempt body, it charges VAT.
Yeah.
The supply of labour comes into a VAT grouping.
So that you VAT group to the parent and the
subsidiary. And that VAT grouping then gets a partial exemption calculation. So it gets to claim back some of the VAT on the labour supply, not all of it.
Yep.
This is now what Spotlight 70 is saying is an abuse. And what they're saying is that grouping is a privilege. Mm-hmm. Well, up to a point.
Yeah.
And if there is any reason why the revenue stream, the tax take, is being threatened by the use of VAT grouping, Revenue and Customs have a discretion to withdraw it.
Okay.
Or to withhold it.
The VAT grouping, yeah.
And so what they've said in Spotlight 70 is, going forward, they're not going to allow this kind of VAT grouping.
Right.
And they're going to look at people who've had it granted already, and if they're in this situation, they'll withdraw it. Mm-hmm. Now, everybody in the care sector does it.
Right.
So what is the point? Because so that's the first thing. All it will do is put up the care budget, which means the government will have to allocate more funds to the care budget. It's robbing Peter to pay Paul.
Yeah.
It's stupid. Secondly, if you take these two out of a VAT group, the parent subsidiary, if the labour is instead supplied to the subsidiary, which is now wholly taxable,
and can therefore reclaim it all.
It reclaims all of it. It charges VAT to the local authority, which reclaims that, and it charges VAT on an onward supply of labour to the charity parent, and that doesn't get recovered. So you get exactly the same
I was going to say,
result.
what actually is the difference between the partial exemption?
Exactly. You're there. It was only because traditionally the labour supply was into the parent.
Yeah.
And then because local authorities could recover the VAT, they would set up subsidiaries to make the supplies to the local authority.
Right.
And the labour would be channeled from the parent through the subsidiary. But if you do it the other way around, it doesn't matter whether they're grouped or not.
Right.
So the whole premise of this is misconceived. Now, okay, it's difficult, VAT, and it's difficult being Revenue and Customs. And there may be out there some people who are pushing the partial exemption calculations a bit further than, I don't know. But what it illustrates to me is an over-aggressive revenue body.
See, the first thing I was thinking, it demonstrates a revenue body that is looking at one aspect and not the whole.
That too. But that, to my mind, falls into the same space. Yeah. It's a consequence of being overly aggressive, and a consequence of being too focused on your little bit is that from time to time you'll end up being over aggressive.
That's an interesting one. It's VAT, so I hadn't paid much attention to it, but it's an interesting concept of, again, not just the VAT issue, but what actually is the purpose of that spotlight in reality. As you say, there might be some who are taking it even further, but Interesting. Okay. Spotlight 69.
Well, yes, we can talk about 69. Can we come back to that? Because we could almost do a whole session on 69. We'll see how the time goes. 68. Yeah. Have you come across this at all?
I came across it when it was announced, and I have seen people offering this type of scheme.
So for those listening and watching, Spotlight 68 is titled Using Prepaid Debit Cards for Profit Extraction to Reduce Profits and Disguise Income. Now, what's it talking about? It's talking about...
It's like...
well, let's just very quickly, the arrangement typically works as follows. A limited company buys advertising, and that's in quote marks, from the promoter of the arrangement. The company claims a CT deduction and a VAT input tax deduction in respect of the, quotes, advertising costs. The company directors or their associates receive an amount often equal to at least 80% of the advertising spend in the form of loyalty points. The loyalty points are convertible by the promoter on a point for pound cash basis, and the cards are then made available to the director and the associates, and they can use it to spend the money at their own discretion. Okay. Now, what exactly is wrong with that? Because they do say that this is different to using an Amex card. And they say explicitly, this spotlight does not include the benefits an employee may acquire in the same way as any other member of the general public. For instance, air miles, petrol tokens, or credit card points acquired by buying goods or services on which such benefits are given.
Yeah, because you can just go out if let's say a company employee has £500 expenses a month, uses their Amex every time and gets air miles.
Yeah.
That's not what this is attacking. This is attacking something completely different in terms of, if an employee happens to get the side benefit of the air miles, that's not what Spotlight 68
so there
is
seem to
looking at,
be, I think there are two things going on here, but they've not been clear about it. So point one is the Spotlight does not include the benefits an employee may acquire in the same way as any other member of the general public. Okay, so if a scheme promoter makes his scheme available to the general public...
yeah, I didn't even think about that way around. Yeah.
In the same way as any other member of the general public. Now, that therefore is nothing at all to do with it. So what's really bugbearing them here is this inverted commas around the word advertising. What they're saying is, well, it's not really advertising.
Well, no, but they're presumably the company's
because a member of the public would never pay for this.
But they're saying that you're going to get a corporation tax deduction on the advertising.
Disallowed if it's not genuine.
Yeah. But is the point not that as soon as you see one of these schemes, it's not genuine advertising? I'm trying to figure out what the advertising is.
So it depends what you're looking at.
Okay.
And some of them sell advertising, some of them sell other stuff. So if you think about, and I know of a taxpayer who uses his business Amex card, registered it in his, it's a business card, but he gets the points because he's the employee.
Okay.
But it's his business.
Yep.
And he uses the Amex card to pay for everything that the business buys.
Okay.
Including negotiating with people who don't take Amex cards to pay a higher price to use his Amex card.
Okay.
Now, Amex don't know that that's going on.
Yeah.
So they're not a scheme promoter. So it's not a tax avoidance scheme.
Yeah.
But what's happening on the deductibility side, is he incurring some of that expense, the additional element of that expense for a non-business purpose? Or is it like the choice you make when you decide to travel first class instead of steerage on a business flight?
Yeah.
You don't have to incur that additional expenditure. Whose benefit is it for? Well, it's you're traveling, so it's for your benefit.
Yeah.
If you view yourself as an economic operator, you could do the job equally well traveling steerage. Well, okay, you might get into some arguments about, well, I've got to arrive fresh as a daisy to negotiate with the Yanks when I get to New York. But let's leave that to one side. So there are things here. This is so short, and so
it's a very short.
The essence of this is they're saying businesses' expenses are being fraudulently incurred. Things are being dressed up as business expenses, which aren't business expenses. This is a fraud.
Mm-hmm.
Why are they pussyfooting around?
Yeah.
with we might disallow you some of your tax. They should have their prosecutors out there.
It's an outright fraud. Yeah.
Unless the advertising is genuine, in which case there's nothing wrong with it.
Okay, so how do we draw the line between what is genuine advertising?
So you can guess what this is really about. This is somebody with a personal service company, something akin to that,
and that's where I've seen it. I've seen it sold to those.
So Joe, who is a contractor, an IT contractor, who has more work than Joe can ever get through because he's a category whatever IT worker.
Yeah.
And the going rate for that is X, and that's what he'll get paid. And there's always work for an X operative to go in and work in a project.
Yeah.
Joe comes across a scheme promoter. He doesn't need to advertise. There's no business purpose in advertising. The employment agency that it placed him do all that. It's absolutely unnecessary. There's no business purpose in advertising, but he's grossing 100,000 a year. He's spending 90,000 a year on advertising, and he's getting 84,000 a year in points. It's a fraud.
Yeah. There's not really another way of putting it, is there?
You don't need a spotlight.
No.
You do, but not in this series where they're saying, "Oh, it doesn't work. We're going to disallow you. We're going to treat it as a benefit in kind. We're going to might disallow your corporation tax deduction, and maybe even your VAT if you're unlucky." Come on, guys.
Yeah.
Either it's rotten to the core, or it's okay.
Yeah. I mean, the ones I've seen, I was like, just don't touch it. Don't get near it. And I think most people are wise enough to know that there's kind of going back to the too good to be true point, but that clearly is. There's no way HMRC would look at that and think that was acceptable, is it? So,
but it raises interesting points if the offer is generally available and there is something which is of genuine business use.
Yeah.
So if you've got a business that does need to advertise and you're paying the going rate, what do they so many pence per click that Google charges you? If it clicks through, it's 10p or to go up in the rankings or whatever it is. If they're charging you on that basis and they're undercutting Google and they're actually giving you 50% of it back because Google are absolutely screwing everybody. No, I didn't say that. Charging what the market will bear.
Yeah.
And they're giving a big rebate because actually it costs them much less. What's the story then? If it's genuine per click, and the business could be paying Google.
I mean, you'd say, well, actually, is that avoidance at that stage because they needed to incur the cost anyway?
Or they decided to incur the cost anyway. So if you were advertising through Google and you switch to one of these providers and they provide the same service but give you a lot of points, that should be fine.
You almost think, well, actually, is that not a commercial decision?
That's a completely commercial decision. And so I'm aware that there are some operators in the marketplace who undercut the banks on Forex transactions, but are still able to offer a substantial points value to the individual because the banks are not cheap. You don't have to take that out, do you?
No, that's fine.
Okay. So interesting. Managed service companies.
This is Spotlight 67, and this is actually something we've been talking about in the office earlier today. So highly topical.
So why managed service company legislation is 20 odd years old, isn't it? Is it?
Yeah. I mean, I haven't actually got involved in managed service companies. I've got involved in sort of IR35 and things when that was coming out for the public sector and then the private sector, and it was, whose liability was. But I always found myself explaining to clients when they were asking me about IR35, this isn't new stuff.
Yeah.
No, the legislation's always been here, and if you've been doing it wrong, you've still been doing it wrong. In that case, it was, I can't remember when that was coming out. Sort of, it was I guess 6 or 7 years ago now, but it was just a change in focus of whose liability it was going to be.
Yeah.
And as you say, same with managed service companies. Actually, this legislation is decades old.
Yeah.
So what's the mischief and what HMRC got a problem with?
It's the last century.
That's true.
And then it was amended in 2007. You start reading this and okay, they're worried. There's a new problem that they're facing, and that's why they've decided to put this out. And the problem appears to be that people who call themselves umbrella companies, some umbrella companies are simply agencies which look honestly and efficiently do your tax for you if you're a contract worker.
Yeah.
And they make sure you pay the right stuff, and they deal with your employment agency, and it's all computerized and it's seamless and you don't have to think about it. And if you're an IT worker, great, that's what you want. And or an HR worker or whatever it happens to be. Some outfits have been holding themselves out as being umbrella companies.
Yeah.
But what they've actually been doing is putting their contractors into personal service companies and then disguising where the money goes, and actually breaking the rules.
Yeah, so I think there's some really interesting points that we've covered so far. We're going to record another episode, I think, which is going to be a Spotify special. So do join us for that, and we're going to go through some more of the spotlights. But for this episode, I think that's about as much time as we've got to cover where we've got to. So next episode, Spotify special, we'll start talking about the next Spotlight managed service companies, and hopefully you can join us then. Thank you.